G'day and welcome to the weekly VEMA Trader Bitcoin market scan. My name is Rhys, and in today's video I'm going to run you through the trade that we set up last week and we'll take a look at how that played out. Then we'll go and take a look at Bitcoin as it stands today. We'll see if there's any trades that we like the look of, and if there is, I'll set those trades up. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so this is the trade that we set up last week. We took a long off this demand zone. There was a 4-hour EQ, the 50 fib was also there, and it was actually an immediate entry trade because price had already started to reject by the time I was recording this video, so I showed you guys how to set up a trade that will enter immediately. Unfortunately, it did not play out. Price came back down through, but the good thing was we reduced our risk because it was against the high time frame bias, so we only lost 0.5% on the account, and we had a pretty good stop loss, right? If this had played out, we would have had a nice position size, we would have had a nice risk to reward. So I am quite happy with this trade. Yeah, it lost, but that is part of the game. So that's really all there is to take away from this. I don't really have any big insights. The probably obvious one was I had less than 6 hours of sleep, so I didn't have a tag for that. I just used a less than 8 hours sleep, but I spoke about that while I was recording the video. Would I have taken this trade if I had more than 6 hours? Probably, because I've had more than 6 hours last night and I still quite like the look of this trade. But worth tagging that, and apart from that, nothing really to note on this trade that I can think of. So what we'll do is we'll head to Bitcoin as it stands today. We'll take a look at the charts. On the weekly, nothing's really changed from last week. So the candle that we got was mostly a doji. Obviously the open and close was slightly higher than the middle, but 3/4 of the way up, it's not super bullish. You do get something called a dragonfly doji, or a gravestone would be the reverse, where price pushes a long way down, closes back where it opened right near the top. But, considering where we actually were, sort of 3/4 of the way, maybe even 2/3, I wouldn't really be calling that I'm pretty sure it's a dragonfly doji, the bullish version, because the gravestone would be something like this, right? That's probably a gravestone doji there, where price pushed up, came basically right back to the bottom, and then closed. So not really seeing much bullish in terms of the candlesticks, although, this week has opened quite bullish. We have moved a fair way up in the last 5 hours, 6 hours, can't really do the maths on that one. But the most bullish thing I'm seeing at the moment is this bullish divergence that we spoke about last week, right? Bullish divergence on the weekly is a decently strong signal, and so that is sort of still making me think we may head up to, about 29,000, retest that weekly supply zone and retest that 38 fib, and then who knows what will happen from there. I still don't think that 10k is completely out of the question, especially if we do reject there. I think there's probably a good chance we do head down to these sort of levels, 12,000, maybe even below. But as always, I like to just play it one step at a time. So that is probably where I'm looking at the moment, but not ruling out that 1, 2, 3, 4, 5 weeks of consolidation above this level isn't a great sign. You really do want to see buyers stepping in at some point. That could be coming this week, as we're starting to see there. But if it doesn't come soon, then I just, the longer this goes on, the more bearish I feel, the more likely I think that this zone will break, and we'll just head down to potentially that 10, 11, 12k region. So that's it for me on the weeklies. We'll take a look at the dailies. On the dailies, we are seeing a little bit more action, right? So we are really consolidating in that range. I've been speaking about that for, I think, 2 weeks. I was thinking we might sort of range up here, potentially see some Wyckoff accumulation distribution. To be honest, I don't know enough about Wyckoff to confidently make a call either way. My bias is always, if I've had a big sell-off, I kind of expect accumulation because I start to expect price to bounce at some point, but it certainly could be redistribution, right? It could be a big sell-off, more selling, and then another move down. So I definitely wouldn't write that off, sorry. But to me, the key levels are this 22,000. That is a supply zone that's still holding price. You can see we rejected off it twice. We did pierce it quite a long way last week, maybe even the week before. So that is, a decent sign for the bulls. And a lot of people are seeing a bear flag, something, kind of depends how you want to draw it, but something like this. And certainly that is valid, right? There is nothing to suggest that that's not a valid bear flag. Personally, because I do like to draw the closes, it ends up sort of just looking like more of a horizontal range. Something like that, which if that's the case, we're actually kind of breaking out of it now, or at least retesting it right now. But as I've been saying for a little while, the fact that we haven't even made it back to sort of the 38 fib after, probably 3 weeks of consolidation? 4, right? 33 days, nearly 5, really 5 weeks of consolidation in this range without even getting back to the 38 fib is not a good sign, in my opinion. It's really showing that there just aren't really many buyers, or certainly if there are a lot of buyers, there is enough sellers here to really stop buyers from actually getting any momentum going. So that could be changing as we speak, right? This is a pretty bullish candle. It's still got 18 hours to go or so, but does look quite good as we're looking at it now. But I wouldn't really be getting my hopes up, and certainly for me, it is just a matter of. It is really a matter of that. We haven't made it back to 38 fib. So if we do break this level, I was actually thinking about setting up a trade to take along on a close above. Something like this. Price gets up, close above, we get an entry, and we write it up. I don't really want to do that on the daily, so I might look at a break and retest on the 4 hour. I'll have a think about it when I look at the 4 hour candles, and I will report back to you guys. But it's really what I'm seeing on the daily at the moment is this bear flag. To be honest, I don't really draw the bear flag in. I prefer my bear flags to be a little bit more, tilted. At the moment, I kind of just see it as a horizontal range, but it does not mean that bear flag is not valid. So that's what I'm seeing on the dailies. Righto, so on the 4 hour, there was a level at about 21,600 that I quite like the look of. I was potentially thinking about taking shorts from there. We did wick into it beautifully and then came back again and rejected really nicely. But unfortunately, that happened over the weekend, so I wasn't able to set trades up on it for you guys because I don't record these videos till the Monday. So we have missed that trade now, and that zone is kaput, right? Price has pushed through that on the current candle, so I would no longer have that zone marked off. Now, I'll talk about this because I want to get rid of it because it annoys me, sort of looks messy. There is kind of weak bearish divergence, right? The market is forming higher highs while the oscillator is forming what I would just call equal highs, right? It's probably technically, a millimeter lower, but for me, for all intents and purposes, that's horizontal to me. So that is bearish divergence. It shows that the moves to the upside are getting smaller, so that can potentially show that buyers are starting to get exhausted, sellers are starting to overpower them. So it's not a reversal signal, but it is just one thing you can use to help you make decisions about whether a reversal is coming. And I look at that and I go, okay, it's weak. It's not the strongest bearish divergence I've ever seen, but it is bearish divergence. So now that that's out of the way, I can remove that line because it was annoying me. The other thing is just the steepness of this trend. You can see it started to break already because we came down there. So that can also play into things. There's potentially almost a wedge, but I think to me that's a bit forced to draw. So I wouldn't actually draw that in. So we are at the top of the daily bear flag that we spoke about, whether you are calling that a bear flag or not, however you want to look at it. We are, intersecting that line right now. In terms of longs, there's really nothing that excites me. So I did set up some longs from about 20,600 this morning on a trade, on an account where I'm trialing a bunch of different things. I'm just collecting data through tagging. I set up a few longs there, but I've just cancelled them because I set them up as we were pushing down. Now that we've had that bounce, if price was to come back here, I would not be interested in longs anymore because I thought price was going to come down and bounce, and now that we've made a higher, I would not really want to be taking longs from here anymore. So would I take a long off here at about 21,000? Not really. And the reason for that is my daily bias is bearish, my weekly bias is bearish, my 4 hour bias, because I tend to draw my market structure really wide, is still bearish, really. My 1 hour market structure would probably be bullish, right? My 1 hour market structure would probably show that kind of thing. Because of that, I really don't like the idea of taking a long from there. For me, it feels a lot like buying the top, right? When I'm expecting downside in the market and price has already had a decent recovery, and I say decent, that's relative because, as I spoke about on the weekly, it's actually a pretty weak recovery, but it's decent on the 4 hour, right? That's a decent move up. We've done, if I can get my shift tool working, there we go. We've done about 13% over the course of 5 days. So, Bitcoin can obviously do a lot more. We've seen it do 30% in a single day before. But for the current market, that's a pretty swift and solid move up. And so just the idea of buying off this level makes me really nervous. It just feels like price is about to come down again, and I would not want to be buying from there. So, as always, when my daily and weekly, or at least my daily bias is bearish, I want to be getting into shorts, and there is a short here that I like. I don't love it because to find this zone, and I am looking at this zone here, to find that I had to go down to the 15 minutes, which is not something I love doing. It almost feels like I'm forcing the zone, but I couldn't find a nice clean zone on the 4 hour. When I got down to 15 minutes, there's a beautiful zone in there, so I will show you guys that. And you can see it's been really nicely respected. So we formed it here, where the market dropped out, came back and retested really nicely. There's also there's probably actually another zone here somewhere, maybe even that. We'll go with that for now. That zone there. And so I think between the two of them, price may, well, actually you can see that now. That's potentially holding price now, and we're just seeing it get front run a little bit. So I'm looking at that and I'm going, okay, there is a really good chance for a short here. Now, going down to the 15 minutes when I'm looking at the 4 hour chart does concern me, because you're expecting a 15-minute zone to stop a 4 hour move, which it will not every time, although that looks absolutely gorgeous right now. But what makes me want this trade is how good the risk reward will be, because the zone is tiny. So even if I'm wrong, I'm going to get a huge risk reward on that trade. Like, let's just say if we had set one up on that first zone, even back to this level here, we're looking at a 5.69 to 1. So you can afford to be wrong quite a few times. Now, I'm going to ignore that first zone. One, because that has probably already not played out, but that, we've already came up to it. If we came up again, I'd be less confident in it. And two, because what I really like about the higher zone is it also lines up with the daily zone, right? You can see that marked in blue. There's also a 4 hour zone actually that it lines up with. So there's that 4 hour zone there. So, I've got a few things kind of protecting my stop loss. So I'm going to set that trade up and then I'll get back to you guys. All right, so what we have set up is a short bounce from alpha. So essentially we are expecting price to come up, hit alpha, and then reject quite nicely. Maybe not that steep, but reject. Now, the reason that I have put my take profit where it is I have a feeling if price rejects here, a lot of people are going to see that as, a double top. The fact that we have had a massive sell-off and then price has struggled to recover. If we don't break through this zone sometime soon, I feel like a lot of people are going to turn bearish if they haven't already. You're going to see more selling pressure. I feel like a rejection here is just going to really potentially lead to a big sell-off as a lot of people sort of lose hope in Bitcoin having a breakout. Now, I would actually probably like to take profit somewhere in here, but what I'm going to do is just monitor that trade, because I do think there could be quite a harsh sell-off. So if we do get to this zone, I'll just keep an eye on things, because I think this zone potentially gets smashed. That lower zone may actually hold sort of through here, because there's also a bit of an EQ probably about there. So I'll just keep an eye on what happens if we do get our entry and price gets down to that level. But, I would rather have my take profit down here and wake up and just see things have been smashed than target here and wake up and see it's come all the way down here. I do think there's a good chance that price will get there. In fact, it honestly, even targeting there, I don't think would be the worst thing in the world. But for now, we will keep it there and just see what happens. So, risk management, I took 1% risk because it is with my high time frame bias. So you can see that there. And the minimum risk reward is 2, but we are actually looking at a 10 to 1. Beautiful, big old 10 to 1. So that's fantastic. So that's what I was talking about, where, because we do have quite a small stop loss, because we looked at the 15 minute, refined that zone, and I actually gave it a little bit more room just for the wick of this candle, which you can see just here. We're getting a huge 10 to 1, right? And with a 10 to 1 risk reward, you only have to have a win rate of, I'm pretty sure it's 10%. I probably should do the maths on that properly, but I'm pretty sure 10% win rate at 10 to 1, you would be break even trading. Might have to be 11%. I'm trying to remember if I've done that too simply and too quickly. But whatever the result, you don't have to have a very high win rate if you're hitting 10 to 1 trades to be at least break even, but certainly to be a profitable trader. If you are at 15% hitting 10 to 1 trades, you are definitely going to be a profitable trader. So in terms of tags, we've got the 4 hour supply zone, the 4 hour 15 minute refine, because I do that sometimes. That's what I've done to refine those zones. Bearish daily bias, daily supply zone, refine zone. with my high time frame bias. Those are the tags that we are going with here. I did not tag bear flag, which is a tag that I have used a few times just because I'm not seeing it as much as a bear flag. And actually, the other one would be bearish divergence, which I have not used before. So let's make that specific, and we'll go with 4-hour CCI bearish divergence. Now, the reason I'm tagging 4-hour, that was atrocious, divergence. The reason I'm tagging 4-hour is because, like I spoke about on the weeklies where I had bullish divergence, weekly bullish divergence, it's worth keeping track of which time frame you're seeing that divergence on. The reason I tag CCI is if I was to use different indicators, so I might use the RSI, I might use like stochastic RSI or some of those different indicators. Bearish divergence on the CCI, I might have a really good hit rate with, and I might be terrible at finding bearish divergence on the RSI. So it's worth me just tagging both those things, both those things, so that I am consistently keeping track of, okay, I'm actually good at this specific indicator. So we will save that tag, and that is it. We will submit that trade. So that's it from me for this week. Hope you guys are all killing in the markets. If you are not doing that well in the markets, then I could not recommend paper trading enough. That is actually something I myself am doing a lot of, because I just realized that I can actually test a lot of really cool ideas that I've had and wanted to test over time with VEMA. It's a much simpler way than my old method of back testing with TradingView and having an Excel spreadsheet and a lot of mucking around. With VEMA, I can actually just forward test these things. I can tag things. I can always go back and tag things later, right? If I want to change what I've been tagging or add to what I've been tagging. So I'm definitely going to drop a video on that in a few weeks. I just got to sort of collect that data, but it's something I'm very excited about because it's just a really cool way of gathering more data and improving your trading. So hope you guys are killing it. Have a great day. Happy trading, and I'll talk to you very soon.